And what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to be talking about support.com or SPRT, and well, it's squeezing, guys. It's up as we speak. It's up about 13% on the day, but it was up 30% this morning in the pre-market, and a lot of people in my Discord community were going absolutely crazy. And you can join that Discord community for free. You'll never be charged a penny, and we have a bunch of great people there talking about different not financial advice, nothing here is financial advice, but we just talk about investments and we have a great time. I'm always hanging out with the Discord community each and every single day the stock market's open, and sometimes we even talk about different things besides for stocks. So it's a good community, and I enjoy my time there. So if you want to join, links are below. Anyways, guys, what's going on with support is absolutely crazy. It's nice to see one of these plays work out. There are a lot of short squeeze stocks that do in fact fail, as they're being shorted for a reason. There's not really fundamentals behind it, but support has fundamentals as well as a short squeeze target behind it. So there's a lot of good things going on with support, and I have a lot to go over today, so make sure you guys stick around to the end of the video so you don't miss a beat. Anyways, guys, if you want up to $70 in free stock just for signing up and depositing as little as $1, use the link in the description to sign up for public.com. It's basically free money. Check that out using the links below. Anyways, guys, let's get right into the video. Alright, my friends, so here we have support.com. It's now at $8.82. Earlier this morning it was at $10.60 per share, and I was watching this whole thing and it was absolutely crazy. We were going off in my Discord channel, and it's definitely seeing that sell-off as it needed a little bit of a sell-off, because we'll take a look at some of the technical analysis of it. It was completely overbought. This thing was rallying, and that's another thing that you have to pay attention to when investing in these short squeeze stocks, is just how volatile they are, because you can see it's at $8.85 as we speak right now, but earlier this morning it was at $10.59. So let's just say you're an investor in support.com, right? And you sleep in the morning, you sleep up, you go out last night, you start drinking, it's a wild night, you end up sleeping in till 11 a.m. which is the time I'm recording this video right now. Well, you lost out on $2 per share on support.com. So with these short squeeze plays, you have to be on your toes. You have to know when to lock in profits, and you have to know that there is absolutely extreme risk when investing in these stocks. I can't emphasize it enough. In just 1 hour of trading time, this thing goes down $2 per share, almost $2 per share. So it's very important you understand this risk and you know when to take profits, because it's absolutely extremely volatile, and as soon as it goes up, it starts coming down really quickly. So anyways, that's my spiel for that. We're gonna look at a few other things, get right into this Vortex data. You guys can see we're up here at 65% short interest, and if we cross check that with short sight right here, they have a 63% short interest. So a lot of good things. Cost to borrow extremely high at 174%. Fintel has the borrow rate at 83%, and only 75,000 shares are left to be shorted, so it is very small in comparison to the float. Utilization is at 98%, and we are going to have to continue to watch this figure, because we talked about it in my last video, which you should definitely watch, because it gives the due diligence on why support.com is going to squeeze. But anyways, we talked about how if utilization goes down, that's a signal of the short squeeze starting to happen. So we go back into this chart right here. You guys can see we have average age on loan and utilization. They're semi-correlated, as you guys can see. This yellow and green line, they both have been going up absolutely like crazy over the past 6 months, and we're reaching like a peak right now. You know, you can't really get much higher than 100% utilization. Once you get to around the 98% level, you can see that this started to level off, but the average age on loan continues to go up, and we know that a signal of a short squeeze is when both of these figures go down. So utilization will go down and the average age on loan will both both go down. So it's very important that we pay attention to these numbers as this squeeze continues. Then again, guys, we have that short squeeze type 3 signal from Vortex that is available in 10 days. So within the next 2 weeks, we should be seeing some bullish activity. Again, it's so risky. It could definitely go down, but this is what we're talking about. Maybe the squeeze was today. Maybe we saw the peak today. We're going to be talking about the cup and handle that this thing's been forming. A very good way to understand when exactly a squeeze might happen in a stock is by looking at the open interest of call options. So we're looking at the support call options right now. This is the earliest strike price, which is August 20th, and you guys can see the $10 strike price has about 7,000 in open interest, which is very, very high. The $9 strike price, 5,000. $8 strike price, about 8,500. $7 strike price, about 5,900. So there's a lot of open interest on this August 20th strike price, which means that a lot of people are anticipating this to be very, very soon. That's only 1 week from today, guys. So very, very important. Again, the $11 strike price, low compared to the others at 1,400. But if we go up to the 12 strike price, it's back to 6,600 open interest, which is a lot. And if we go to the September 17th, you can see that all of these strike prices aren't as good. The $11 at 3,800 open interest, the $12 at 3,200. So we're already seeing that it is a bit lower, 3,000. Again, guys, if we go down, we have to look at some of the lower ones. We'll take a look at the 7.5. That's 8,000, so a lot more bullish on the 7.5. 6, about 5.6. So people are betting on lower strike prices on September, which is interesting. I guess it's more of a gamble on the August 20th. Then we can see right here, we have an amazing technical analysis. You take the chart and then you put a coffee cup, and then you get a cup and handle pattern. All you have to do is put an emoji of a coffee cup on the chart, and then boom, you get the cup and handle pattern and you start going to the moon. Anyways, we have to go over to some of this crazy stuff that's going on. As you guys can see, there is an interactive broker's notice of margin increase for support.com, and what this basically means is that they're going to be increasing the margin requirements for a stock like support.com because it's getting very, very expensive to borrow. We saw that cost to borrow at an absolutely insane level. What this means though is that short sellers, they're shorting the stock on margin, so now they have to pay more to hold these short positions, which is actually going to force a bunch of people to cover their short positions. And this could actually explain why we had such a big bump today. It's because brokers are now forcing people to post more collateral, and another way that you can do this is by covering your short positions. So I do believe that this was definitely some fuel to the fire for this bump that we saw this morning, and we're gonna have to continue to pay attention to see if more brokers increase the margin requirements for support, because that could be a huge catalyst to this thing continuing to squeeze even higher. All right, then we have here on Twitter the former hedge fund manager WillMeed. Guys, this guy is very big on Twitter right now for calling out all of these short squeezes. Guys, he won't shut up about support. If we just scroll down, support, keep scrolling down, Zella, support. You guys get the point. So let's take a deeper look at some of these tweets. All right, so right here he says that there's a textbook bullish cup and handle forming for support, and he did his technical analysis right here. There's also a reverse head and shoulders here almost perfectly, and that's when I picked up on support for the first time. I made a video about penny stocks to buy now. I listed support at about $4 per share, and now it's looking pretty good at above $8 per share. And you guys can see that it turns from this big cup pattern into this wedge pattern right here, and it recently broke out of that wedge, which is part of why this has been so bullish as well. Then he tweeted again just 2 hours ago, 63% short interest. Wow, it went up. This could be like a GME squeeze. I'm not going to make the bold claim that this is going to be just like GameStop, because it does not have the same social media attention as GameStop at all, and we can look at that if you want, but it's not too important. It's not really on any of my social media scanners, but that is awesome. He's very, very bullish about support, and he has a price target of $15 per share. That's about it for the video. I hope you guys have enjoyed. I hope you guys learned something today. Support.com is a great one. Again, not financial advice. This is an extremely risky stock, and I even showed it to you guys with support dropping almost $2 per share in an hour. So it's very, very risky stuff that you're playing with. These low float High short interest stocks are not what I consider long-term investments. They're day trades, they're gambles, they're ones that you want to hold for a few weeks to a few months, but it's not necessarily something that you want to hold long-term unless you have done your long-term fundamental due diligence and you can see that this thing is undervalued in a long-term perspective, which is a completely different analysis than what I have been giving you guys for these short squeeze stocks. So just understand the difference between a short squeeze due diligence and a long-term fundamental analysis due diligence. And obviously short squeezes are always going to be more riskier than long-term fundamental analysis. So just keep that all in mind, know your risk tolerance, and put up only as much as you're willing to lose. Don't let your emotions get in the way. Know that what I'm giving you is not financial advice, and in the end, just have some fun with it. You know, it's the stock market, there's ups, there's downs, but in the end, we're all here for that wild ride. So if you want to join me on mine, make sure you guys subscribe to the channel, like the video, turn on post notifications, and yeah guys, that's about it. I hope you guys have enjoyed. Peace.